time to be a dividend investor. I love it because the the market is just down. We've had the highest inflation in what, 40 years, I think they said. Hey, that's fine with us because, as we like to say, when the share price goes down, the yield goes up, and us investors get more bang for our buck. Baby, we love it. It's just so wonderful to not have to worry about the market crashing and being red. And for those of you that are newer investors, this is really going to test your resiliency. If you are a dividend investor, are you prepared to see your portfolio down 25, 30% or more? We don't know where it's going, but we do know that in the future, always good. Well, I say the future, but we're always in the present. We know that good companies will be good companies, will be good companies, and they are always going to be valuable and in demand. So good companies never go out of style, right? Alrighty. So let's get to this the portfolio update. And we were going to, let's see, what do I want to start with? So what I did is Starbucks. I had another covered call option that expired worthless, which is what we want to see. And I guess, I guess we can start there with with that. So let's pop that onto the screen. We'll throw on the screen there. We're not throwing anything. Let's see. Where are we at here? All right, let's start here. And there we go. So this is the self-directed IRA and what I did in that. Now, you see I got a bit of dividends out of it. Love it. But down here on the bottom on 6.6, well, actually on the very bottom, I had a covered call option expire from last week. So it was an $81 covered call option, meaning that if Starbucks closed below $81, I keep the shares. I always keep the premium. And sorry, a little bit out of breath. I'm running down here to get you guys the information. I love it. That was one that we got $25 on. But this one here on Monday morning, I sold another $81 covered call option for $1.10 a share times 100 shares was $110. Charles Schwab takes the cut of 65 cents per options contract. So all in all, I ended up with $109.35. Now that gets paid immediately to the account. Nothing I had to do extra. We'll have more on Starbucks in a second here, but some of the dividends I got in our self-directed IRA is $13.56 from Johnson & Johnson. Archer Daniels Midland, $3.20. Microsoft, we only have 2 shares, so $1.24. That's one of the companies that I would love to get more of, and I'm hoping we can pick more up. It gets around $200 a share. That would be fantastic. So that ExxonMobil, a little bit of news on ExxonMobil. Joe Biden kind of ripping into them. We can chat about that in a minute. $13.20 and $21.30 from Chevron. So that was in the self-directed IRA. This right here is our Roth account. Now the Roth, the good and the bad of it is that we're capped at $6,000 a year. That's all that you can put into a Roth IRA. So we hit that 6K. I can't buy anything else. And now it's just waiting until next year till we can put more money into it. But I'm collecting dividends, and you can still do anything you would do in a brokerage account. You just cannot put any more money in. So that's a little bit limiting on it. And Roth IRA, for those of you that don't know, is you put that money in after you pay taxes on it. So any gains that I use in retirement will never be taxed, and I can always take the contributions out. But I believe, don't quote me on this, I believe it's 5 years you have to wait. So I put that $6,000 a year in. That means after 5 years, I can always pull $6,000 out. $7.91 from J&J. And then into the bridge, which is part of this is the trifecta on the board. There's 3 accounts that I share. We have a 401k through my employer, and that is a sizable chunk. So this is just what we're sharing on the channel and trying to build extra income and sharing it with everybody. So this is our taxable account, the bridge, as we call it, just trying to bring in as much passive income as we can. Now, we don't know what the future is going to hold, but we do want that extra income a year. And it's, I think, almost $2,400 a year. So that's just, that is outstanding. I mean, that is a very nice vacation that would be paid for if we just collected the dividends and did not reinvest them. But again, Johnson and Johnson. So you see, I have it in all three accounts. 28.25. Archer Daniels Midland, $4. So that's another double dipper, well, triple dip on J&J. We put in 250 bucks. 212. We'll get to the buy in a minute. More dividends again. ExxonMobil 25.52 from there, and I did receive dividends from Snap-on. So why not? I bought one share of Snap-on at $212.50, and then it promptly dipped to $209 and change. And all in all, let me get my list here. We received $92.66 in dividends across the three accounts and added $5.68 of dividend income through that one share of Mr. Snap-on. And I'm still sharing this. Okay, we'll stop the screen share. Where is it here? Oh boy, egg on my face, huh? Well, this is the beauty of live. So, yeah, that was the portfolio update. And for those of you that are not live, there's a little box next to my head, and click on whatever video it is that I put in there, and I'll see you in that video.